Welcome back to the SA Weekly Talk Show. Mike Callahan here, co-hosting this week with special guest Dan Platta of Blue Skies, CEO of Blue Skies. Blue Skies, if you haven't heard about him, we're going to dive into what that is, but very impressed with Dan and his group, Bookkeeping, Beer, and BS. And if you are a fan of the SA Weekly Talk Show, I'm actually going to be joining Dan next week on Bookkeeping, Beer, and BS. Talking all things financials, automations, and you name it, crazy business. But here on the SA Weekly Talk Show, I wanted to bring Dan on because he has a lot of experience in a lot of different services business. Now, predominantly Blue Skies is working in windows and home cleaning, but through his bookkeeping, he has expertise in pretty much all things service businesses. So if you have any questions or comments, drop them in the comments below, and if we have some time, we're going to answer those questions live at the end of our talk. But Dan, if anybody hasn't seen you at any of the conferences, I know we ran into you at several service industry conferences throughout the last few years. Really impressed with what you guys are doing over there. But if somebody hasn't heard of you or what you do and your background of predominantly bookkeeping, but maybe a little BS and beer as well, would you mind kind of introducing yourself and letting people know how you cut your teeth in the service industry and then evolving into bookkeeping?
Yeah, sure. Sorry, I'm doing some Facebook shares. So if somebody catches this on a different page, I'm just trying to get it out there. So anybody that, it's maybe too early in the day to drink beer, but we can still BS and maybe feather in some bookkeeping. But yeah, so the whole bookkeeping world for me, in a way, came about by accident. So I got into the industry, to help one of my buddies, Mike Dalkey, with his businesses. And I was doing some bookkeeping stuff for him. But for those that don't know my story, I spent like 10 years in the corporate world. No surprise, an entrepreneurial guy. I got totally burned out after a decade in the corporate world. And I was like, it wasn't about the money anymore. I just wanted to do something fun and create value that I got to keep, or at least the people that I like to work with got to keep. So we had a window cleaning business at the time. We bought some more window cleaning businesses. We bought some home cleaning businesses. And really, that was our focus for a long time. And it still is. We still own and operate those businesses, and they're kind of our cornerstone. But in the last 2 to 3 years, we had, you build this network of other small business owners, and you all kind of like, they say misery loves company. I don't know if we're all miserable or not, but we all totally gravitate to the same type of stuff, right? And so we built up this network, and totally by accident, we had people start asking us for help on some of the things we had built systems for. And, we had 100 plus employees, and so in multiple locations. So we had to get really good at a few things that we were doing remotely, which was recruiting and bookkeeping and marketing. And over the last few years, we started to get tapped to just help people out with their systems using our labor. So we had the labor, and we had our systems built. And so we just started like figuring out ways to plug our friends into our system so they could get the benefit of our scale. And then, then they're like, well, that's awesome. We appreciate it. What do we owe you? And the first thing I could come up with is a case of beer, because I'm from Wisconsin, and that's how you do, a favor, you get a case of beer. But eventually we realized, we actually have a business here. And so for the last couple of years, we've had our Blue Skies admin services business. So we flipped sides of the table at the industry events. We would always go as a participant. And over the last couple of years, we've had to like figure out how to be a vendor. It feels really weird. I'm sure.
Honestly, it's got to be the weirdest thing. I gotta hop in here. Is that transition from the service business to a vendor, and then maybe being both the service business and the vendor being at those events is really it's an interesting feeling because those conferences are great. Got a big event coming up right now is SA Thrive, our virtual event for service autopilots, and then hopefully everything calms down with COVID and the national crisis, and we return back to SA7 back in Dallas next year. But Dan, before we really get into the nuts and bolts of bookkeeping and the things we really want to talk about, I got to give you guys some credit. We had a member that reached out to us as a certified advisor, service autopilot, and said, "Hey, Mike, I need some help with basically putting together a help wanted ad in Indeed, Craigslist, Facebook, wherever you're going." Gentleman had some really good points on that, but he was basically formatting the the application, how do I put this, is more of this is what you need to do for us and this is what you're going to get paid. And it was all focused on basically just dollar, but nothing around culture and things like that. And obviously Blue Skies, windows and home cleaning, then you've got different locations around, I'm assuming the United States, but it was interesting being in upstate New York. I opened up the filter on the Facebook ad part basically for help wanted. And I ended up, I think it was for the window cleaning company, seeing one of your ads and then with the link into the automated basically
system.
Yeah, but it was, this is totally off the cuff, but I don't know if you feel comfortable at least just talking about on an extremely high level what you've seen as success when you go out for getting help in the way you're formulating that. Because I know this gentleman truly wants to get good employees. We all do. But a lot of times, including in the early years myself, I'd be focusing on you need to show up. And this time you need reliable transportation. You. It's not like what can we do for you? And obviously at this point, the game's changed with the millennial workforce. That doesn't necessarily fetch someone outside of like literally wanting a paycheck to cover probably like a carton of cigarettes and some booze for the end of the week. Like that's probably not the person you want to build a business and a culture around. So before we actually dive into what we're talking about, the financials and the bookkeeping going into, basically in the middle of Q4 right now, would you mind hitting on that? Because the way you had that ad, I saw it yesterday morning. I actually sent a link to it to the gentleman, said, hey, this is a good example of what you kind of should be basing some of that on.
Yeah, I think that's an awesome question. There's, it's a bit of an art and a bit of a science type of thing. Like you mentioned, like the culture part is really the art to it. The science of how you talk about your culture it can be very like methodical. It doesn't need to look like a mathematical formula, but in a way it kind of is. And we, for when we write a job ad, we basically stole Simon Sinek's model of why, how, what. And so if you don't know Simon Sinek, he has TED Talks, he has books. He's a super engaging guy, but he, in one of his TED Talks specifically, and he has a whole book that elaborates on it, but I think you'll get the gist with his TED Talk. But it basically says the companies that market successfully start with why they do something, and then they talk about how they do it, and then they talk about what it is. Like what it is the least important thing. And for your job description, that is like what it is your company. Nobody really cares about your company yet. They eventually will, but they care about why they should come work for you, and that's all about your culture. And so weaving in the cultural stuff first, why they're going to love working for you, and then the second thing is how they're going to do the job, like what that looks like on a day-to-day basis. And the last thing is like, oh, we happen to be a lawn care company up in upstate New York or wherever you're at. And by the way, here's kind of like the pay range. But it's got to engage them with cultural stuff first that makes somebody like read through the whole ad, right? And get interested and say like, this is where I want to be, right? And it's the same thing that causes people to leave companies, which is a shitty culture, is the same thing that attracts them to companies up front. It's not the money, it's the culture, it's the vibe, it's the place they want to go, because chances are, hopefully they already have a job, but they're planning on leaving it. They're just not going to leave it until they have something else. And they're probably leaving it because it sucks working there. So create a job that they want, an atmosphere that they want to go to, and then highlight that in your job ad and just always start with that why.
Love it. And I haven't really heard that Simon Sinek analogy, but I completely agree with it. So it was interesting. And I think probably why it resonated with me is that ad looked very, very similar structurally, the way we broke out the ones in Callahan's lawn care. So I'd sent the gentleman one of our old ads that we used at the lawn care company. And then I went through and I'm like, well, there's got to be a newer version of this, or there's got to be something that resonates to kind of say, hey, it's not only me just doing this, like here's somebody else doing this and it looks not exactly the same, but it's resonating the same thing. So I'm glad you brought that culture piece in and how you weave that all together. Because that right now, let's face it, labor's tough. We've gotten away from the $600 a week unemployment bonus, as I like to call it. And it depending on the state of where you're at, it's fluctuated, but it's hard to get people to actually show up to these jobs, especially if it's seasonal. We're getting near the end of the season. And speaking near the end of the season, believe it or not, if you're watching this live right now, we're in the middle of Q4.
It's Q4, baby.
2 months left. And especially if you're working outside, lawn care, landscaping, pest control, you're probably not going to capitalize, depending where you're in the country, on the full what's left of Q4. Now, maybe if we're in the cleaning industry, we're going to obviously capitalize it. It's a big one there as well because you've got the holiday rush. So whether you're in lawn care where you need to be pushing down the pedal and driving bottom line margins, because as we're going to talk about, we've covered most of our overhead, at least the fixed part, or if you're in home cleaning, it's time to upsell those ancillary services and double down on that one-time reoccurring service. So Dan, what do we do here with a few months left in Q4? What do we look at? What should we be focusing on?
To me, and this is maybe almost like too plain and simple, but just putting money in the bank. It's like, and I'm up in Minneapolis, and it's not much different than upstate New York. Like, you got 8 weeks left. Like,
maybe it's cold outside right now.
Maybe, yeah. I mean, I was telling you earlier, like, I'm going bow hunting right after this. Our high temp today in Minneapolis is 48. The lows were in the 30s. So, like, the leaves are going to start dropping like crazy. We need to go out and get a bunch of work done as fast as we possibly can before we get covered in 3-4 feet of snow. So now every part of the U.S. or the world is a little bit different, but the trigger for the consumer is still there. Like, just like it is in the springtime with spring cleaning, like fall is like winter prep time, right? And so it has to, and for our business, it has to be winter prep time because our revenue is probably going to dip a little bit. Maybe not if you're in the maid service space or in janitorial, you can keep it rolling. But if you're working at all on the outside of the house, I would say, like, what you should be focused on is almost nothing. You should just be focused on executing. Like, make sure you have the capacity that you need and make sure you're booking the demand as fast as you can, and just worry about making dollars pretty much through November. The flip side of that is, and the downside to being like so laser focused on that, is it makes it really hard to start thinking and looking at 2021, and we totally put it on the back burner, and we like push, and then all of a sudden it's like, man, it's Christmas time, and I haven't started like even thinking about 2021 or like creating a budget for it or planning on it at all. Like, I'm just happy that this year's done, right? And we like go into hibernation mode. So it's not good or bad, but it's go time. It's time to make money. All capacity demand right now.
What do you say to an individual like, man, Dan, it's been crazy. We just got out of COVID this spring. I've been locked up with the family. You know, it's uncertain. I just got through the lawn care season, or the doors just opened up my home cleaning business. I've been going. Man, it's almost the middle of October. I'm burned out, Dan. Like, can I just coast a little bit and get a breather? Like, what do you say to that? Because is there inherently a negative effect if you just keep the status quo and just kind of go into the winter softly? Like, what are you seeing with the companies you're working with that are doing that? And how do we avoid that if we should be avoiding? I'm assuming we should be.
I mean, that's tricky, right? Like, you gotta do you, and you gotta take care of your mental health. But I also think as entrepreneurs, we didn't start a business and get to where we are because we ever feel like it's okay to coast. So we all have those days where we wake up and you're just like, F, like, I don't have it in me to push today, but we all know that the next day it'll be back, right? And so we just have that like natural fuel and fire to drive it home, especially when we can see the finish line. And if you're doing exterior stuff, you can see that finish line right now. And that usually, even, if you're running a race and you're totally exhausted, I've never run a marathon, but I can imagine what it would be like. You got, 3-4 miles left and you're dead, but you only got 3-4 miles left, and you just do it. You just figure it out. So I'd say just make it happen. Like, now make sure you're delegating appropriately and make sure you're automating appropriately. And Mike, and you and I have been on a couple different lives recently, and we talked a ton about automation. So for those watching right now, if you didn't check out Sean Day when he was with Mike a month or two ago, and then Mike was on with Sean on Blue Collar Recruiting, we talked a ton about automation stuff. So to help alleviate the burnout, delegate like crazy, automate like crazy. We're actually using Mike's bot here. I got a meeting with Kevin next week to start implementing the bot and automate and use some labor relief for sure. But got 8 weeks to go. It's just time to make money,
Just got to get it done. And do you have any, before we jump into, because the next thing I kind of want to touch on is with COVID and doubling down and creating that cash flow, or that cash flow war chest, as Jonathan Potoshnik of the Lawn Care Millionaire calls it. We're going to look at some budgeting and some targets and things like that we should be looking at as benchmarks now, and then how we're going to set that up for 2021. But as you guys are running, different cleaning and window cleaning operations throughout the U.S., we've kind of set the mindset of the entrepreneur. What are we saying to our team members? Because I know at my lawn care company, we had to have basically, for lack of a better words, we called it a retention bonus, basically, a retention payout, that there would be almost a kitty of $1,200 to $2,500, depending on the longevity and the tenure in the position. But they had to get to the end of the fall cleanup season. And when we put that equipment away, they knew it was there. But right around this time, within a week or two, I remember I have to stand up on top of the trailer. And guys and girls, I hate to have this meeting, but we are near the finish line. And if we want to get that retention payout at the end, we've got to get through the season. And that seemed to be almost letting them know that there was that finish line, whether it's right or wrong. But I mean, they knew most people weren't going to walk out on at least $1,000 that was guaranteed to them in a few weeks from now. If they at least finish this season. So is there any tactics or things or ways to approach your team, or the way you guys have approached your team to not only have the mindset of the entrepreneur, the business owner, but how do we help the folks in the field? Because I think that's probably even worse than us, because at the end of the day, they don't own the business. Hopefully they're bought into it, but man, it's 48 degrees out in the morning. We're getting there. We're wiping the frost off the lawn mowers, or hoping the windows aren't freezing while we're watching them. How do we get in the psychology of those workers to get them across that finish line?
So I think money can do a little bit, right? Like, we're all a little bit motivated by money. It's not everything, but it sure as hell helps.
But it doesn't do everything, that's for sure.
I love the idea of like an end of fall bonus and tied to like, we need you to stick it out. I also, I was actually talking with my business partner in Minneapolis about, let's do a retention bonus in the springtime. And that springtime bonus, could be thousands of dollars, but it's also going to be tied to this fall. So if they finish the fall and come back in the springtime, like, they get a huge bonus next year as well for making that turn. Cause we basically shut down for 3-4 months here. I think that's part of it. The other piece of it, like, we know money isn't everything. If they get a job that's willing to cover that bonus and the culture's not right at our company, they're still going to leave. And in today's world, with how hard hiring is, there's no saying that a job, they don't find something else and negotiate the bonus that you were going to pay them into a hiring bonus with that company. So from a cultural standpoint, I think now is the time to like really focus on employee engagement coming down the stretch. One thing that we make sandwiches for our guys. So they come in, Mondays suck. It's still like, it's cold, whatever. They come in and get a hot breakfast sandwich that our leader is cooking, on site. Hot coffee, hot chocolate, whatever, like running them stuff when they're out in the field on just tough, shitty days, making sure that they have good equipment, stuff that's comfortable, especially if they're working outside. But I think anything you can do from an employee engagement perspective this time of year, the money's good, but making them feel like they're being rewarded for busting their butts and, below freezing temps. That'll drive it home.
Awesome. All good stuff. Couldn't agree with you more. I know at SA5, I believe it was Jason Cupp, who's really big in the SA ecosystem as well. One of the top industry consultants, talked just about what you're talking about. He's throwing some things in the fridge, breakfast in the morning, and really defining that. And I know a lot of people that Jason worked with find a lot of success in doing that. So I couldn't agree with you more. But diving in now, we're at the end of Q4. We're in the middle of Q4. We're looking at budgeting. How do we go out and set some targets for 2021? And each industry is a little bit different, but at the end of the day, a budget's a budget. We've got to put it into play. Here at SimpleGrowth, we're just finishing ours up, putting the fine touches on it for 2021. We're putting that into our BHAG, our big, hairy, audacious goals, and where we want to go, and creating public accountability. But if you've never created a budget, or you're kind of struggling with it, I know we touched on it a little bit last week with our last guest, but I think your approach to different targets and the way you approach that is just a little bit different. I really like our pre-talk of how you tackle that. So do you mind kind of diving in of how you recommend setting up the 2021 budget and some of the targets, and if there's any difference in industries you would look at?
Yeah, definitely. And to what I was talking about earlier, I think everybody needs to be totally focused on making revenue right now. The detriment of that is that it kind of screws us over for planning for next year a little bit. We just like literally run out of time. So one of the things that we like to do in Blue Skies for budgeting, and budgeting like sounds so boring and so trivial and like you're just guessing at the future. There's two ways to look at it, and we kind of mash this together. So one way would be that your budget should be a reflection of what you've done historically, and then like that as a progression going into the future. The other way to look at a budget is as a target that says, here's my goals for next year, right? And the truth probably lies somewhere in between those two things. Your budget is what you want to be able to measure against and stretch for. So, and maybe you even have like two budgets. You have like, here's what we expect, but here's our stretch goal or our BHAG, right? Either way, though, that takes a long time to put together. So one of the things that I've found from doing bookkeeping for the last few years, and like super interestingly, whether you do lawn care, home cleaning, pressure washing, janitorial, any, like you can go on and just nitpick any service company. Our basic P&L structure is exactly the same across all the service companies. And we have an interesting lens, because we run our own window cleaning, pressure washing, maid service companies, so we know exactly how to dial in those P&Ls. But because lawn care is not much different, because janitorial is not much different, because any service company is not much different, the way to structure the P&L and the percent expense of revenue that you should shoot for anything, we know it. It's dialed in. So one of the things that I'm working on actually right now for everybody for this fall, and like we talked about earlier, this is just something I'm going to make for free to try to help everybody out because budgeting sucks. And I even like accounting, and I know budgeting sucks. But I'm going to build target budgets for everybody that is based on their industry, based on they get to punch in their revenue goal. So it'll still be a little bit of like what you expect to do and what you're shooting for, but all the expenses will fill in. And then there'll be a way for them to toggle and say, like, I'm actually going to spend a little bit more there, or I think I can do a little bit better here. But it'll turn their budgeting process from hours and hours and hours to less than an hour, I'm hoping. So that way they can focus on revenue now, go make a bunch of money, let me take care of the budget for them. They just basically hit me up for my spreadsheet and let her rip. So that's what I'm working on for Q4, so that 2021 is easy and starts off smooth for everybody.
Yeah. So at the end, obviously, everybody's listening here, whether you're live on Facebook, recorded, or even on the podcast, we'll make sure we get your contact information so people can reach out for that template. But I believe you actually had a payroll protection PPP spreadsheet you gave out to one of your groups there as well, and I got a hold of that. And that template itself.
I'm always whipping up spreadsheets.
I thought I liked Excel sheets, but you might be my brother from another mother. I was like, there's no need to recreate this. This man has masterfully put these statements together in formulas. But if it's anything like the payroll protection payback sheet, I mean, that just very nicely put together. So we'll definitely at the end of this get some information how people can reach out for that. So now we're kind of set these budgeted. And we're looking at, now we're getting near the end of Q4, and we're calling our accountant, and the accountant's like, and man, even with this pandemic, you guys weighed way too much money. You should go buy some equipment. That's traditionally what we hear. It's usually an ugly cycle where we go out and we want to accelerate that depreciation. So obviously doing that, sometimes it's the right move, sometimes it's the wrong move. I know you've got a lot of expertise in this, but I think looking at that, what are your thoughts on cash flow? How to buy it, lease it, finance it, pay cash? And what's the benefits of, potentially depreciating out of the 5 years or accelerating the depreciation for the basically the tax write-off to offset the gain of income? All thoughts, depreciation, acceleration of buying equipment right now.
Yeah. So, and I do think to what you said, the first step is like, if you're thinking you need to buy equipment or you're not sure if you should, whether you need it or not, like talk to your CPA. The equipment is only like a small part of your overall tax picture, and your taxes are personal. They feel like they're business to us because most of our income, if not all of our income, comes from the business, but your taxes are personal. Your CPA is going to be the person that knows that. Even me as a bookkeeper, like I won't know your tax situation. So make sure you're talking to your CPA about it. The idea of buying equipment in advance of the end of the year to get the tax write-off, not a bad idea. if you've got a bunch of income that got stacked up this year, especially, and depending on what happens with the PPP loan, they still, like right now, the PPP loan and any forgiveness that you get from it is technically taxable.
Yeah, that's up in the air, but that looks like it from what I've seen right now recently. It's going to probably be taxed as income, correct?
Exactly. And so like that's a shit ton of income sitting there, depending on what you got, right? And so buying equipment might be a great way to reduce your tax liability this year and offset some of that PPP if you got it and your business, hung in there and you were okay. God forbid if it didn't, like then maybe the PPP was just enough to balance you out, and buying equipment doesn't make any sense. But if you're going to buy equipment for tax purposes, that doesn't mean take all the money in your bank account just because you have the cash and go blow it on equipment, okay? So just because you have the money doesn't mean you should spend it. Cash, the best use of cash is not equipment, it's marketing. Marketing grows your business. Equipment doesn't grow your business. It just helps like fulfill that. So marketing is the best investment that you can make. The next best investment you can make is usually in your people, and maybe like the third or fourth best investment would be like better working equipment. But just because you have the cash doesn't mean you should, and let's say you're going to go buy a $30,000 truck or a new trailer, or mowers, or whatever it is. Just because you have the cash, don't spend it. We have a couple rules at Blue Skies that we use when we buy equipment. So I'll run through those real quick. One of them is always finance. And Ramsey would kill me. Dave Ramsey would kill me if he heard me say that, but he doesn't really care who I am, so I'm probably in the clear. But always finance, because us put an asterisk around that. Not always the right thing for everybody, but generally you can get an interest rate for 5 to 8% financing an asset because there's collateral, right? The asset. Generally, our service businesses generate a 20 to 30% return. When we put marketing money into our business, assuming we know how to manage the marketing of our business, it spits out a return. If it didn't, we wouldn't do it, right? Like our business is nothing but our own personal stock market. We could take our money, go put it in the stock market, try to get a return. Instead, we usually take our money, put it into our business to try to get a return. And in general, our businesses return 20 to 30%, let's say. You will always, always, always want to go borrow money at 8% and then go get a 20 to 30% return. Like mathematically, that works every single time. So instead of taking $30,000, putting it all into a truck, you want to finance that truck. You're still going to get the tax write-off of it, even though you didn't spend all the cash. Like you still purchased that truck. It's still an asset. It'll still be depreciated the same way whether you bought it all in cash or financed it, but you're going to want to finance it so that you can save your cash, go invest in marketing, and then give that truck something to go do. The flip side of that is never finance all of it. It's super, super risky to finance 100% of an asset, because the minute we drive it off the lot, we know that it loses value, and now we're upside down in it and backwards. And like, that sucks in and of itself. It feels shitty for one. So like reason number one not to do it is because it just feels awful. But reason number two not to do it is because all of a sudden you are out of options, especially if you don't have the cash to buy it out. Now you're totally out of options. Like you're stuck. There's not a whole lot you can do to get out of something that you're underwater on. So the rule that we use is always put down at least 30%. So that gives you a range, like 30%, you have enough of a cushion that you're not going to get upside down on it, but finance the other 70%. Like get that leverage so that you're generating more income in your business, spending it on marketing. Another thing that you could do to that point, if, buying an asset isn't a thing, maybe you're a home cleaning business and you're not running company vehicles or anything, so your assets are really light. You're not going to go buy a truck, right? What are you going to do with the truck? See if you can buy marketing in advance to get the tax write-off this year. That might be an option. See if you can get into some contracts. It might not make sense from a cash flow perspective, and it doesn't, don't do it. But again, the number one thing to invest in your business is marketing. Equipment doesn't grow your business, marketing and people do. So if you're trying to get some expenses that reduce your tax liability for this year, like maybe even start with marketing and like prepay on some stuff so that you can get that expense on your P&L.
Cool. Really good advice. A couple of things that I honestly have forgotten that we've done multiple times in the past is instead of buying out those big trucks and those things for that write-off, we'd spend $35,000 to $40,000 in a month and a half to about a month in the spring for that advertising rush. Mm-hmm. And we would literally go out and pre-buy that pre-springs rush if we had the cash flow and we needed to have an offset. And I think one of the biggest things that allowed us to scale our business exponentially quicker than a lot of people in our market is they were going out and buying $35,000, $40,000 trucks where before they had the work. And you mentioned it, like the marketing's got to become before you buy the equipment. And if you have good vendor relationships, as far as your truck, your lawnmower, your trailer, whatever else you're doing in that service business, those things can be bought within 3 to 5 days, especially if you've got good credit, if you have to do that, or if you've got cash money on hand. So those things are, I think, can be very dangerous because we're talking about cash flow, and cash flow crushed a lot of people in COVID when that hit because people didn't, they weren't planning on their business literally shutting down or going down to 20% capacity literally overnight. So cash flow is king. So obviously I think that's great advice. You just don't want to go out and spend that money because you may need it. And you really kind of need that cash war chest of maybe 8 weeks as they did with payroll protection, or probably a little bit more. So if something does hit the fan, the second round of this, if it hits, you're available. And if the government's not coming with a bailout, you can at least bail yourself out and keep yourself afloat. So as we're talking towards the end of this, Dan, here, and I know your time is very valuable and compressed schedule, so I appreciate you joining us last minute here with some things changing here on the SA Weekly this week. It's got me thinking. So I know in my journey as an entrepreneur, early days of starting out in high school, going through college, we started out with a DBA. In college, became an S Corp. And then with SimpleGrowth, we originally came out and started in as a LLC and did a subchapter S Corp election for actually filing the taxes within the LLC. So I guess over the last 25 or 26 years, I pretty much have hit the gamut of everything you can do outside of an actually C Corp. So far as structuring the business, if we're setting up our budget, we're buying sorts of equipment for tax write-offs, and we're doing everything else we should do to set ourselves up for success, is there anything we need to be looking at if we're looking for our business election as far as the C Corp, the S Corp, the DBA, whatever we're looking at? Is there timing and things we should be looking at going into Q1 2021 to maximize the benefit of the entity that we're actually using, or if we do shift an entity in that case?
Totally. And I think that if somebody would teach us before we start businesses about like some of the things that you need to know before you start a business, this should be like one of the top things, is how to structure it, when to become an S Corp, when you should just be an LLC, and what the tax ramifications are. Now, like I'm even an accountant, and taxes, like, it's like, gross taxes. But like you have to have a basic understanding to know where, like, how to be efficient with your tax planning. One of the things that I see that trips guys up over and over again is they wait way too long to become an S Corp. So you talked about doing it in both of your businesses pretty early on. You said even in college, you guys figured that out. So
yeah, we had a couple crews and started actually making more money in the business than I would have with my corporate gig. So and you'll probably elaborate this, but one of the things that I wish is, like, people would tell you is, like, you need to get your bookkeeper, you need to get your accountant, and you need to get your financial person, and sometimes your lawyer, all on the same page, talking the same language. But we were accumulating revenue and basically value to that business when I was still in college, that I didn't necessarily own a house or anything, but I wanted to basically get that corporate veil over what we had actually built. And that was, I was blessed enough that a lawyer that I knew was like, hey, you need to get with an accountant that knows what they're talking about, and really look at that entity, because you've got 4 or 5 employees. You may still be in college, but you own a few trucks and equipment, and that's got to be taken. So I don't want to cut you off, but I just, that was the turning point. But as entrepreneurs, we're on this like lonely island, and this is where social media and everything is beautiful, because now we can talk to each other virtually and share these experiences and learn from each other. But I'll let you get into that point, but I think you're about to make an extremely important point.
So let me first say, like, how the income and taxes are going to work if you're not an S Corp. So if you're not an S Corp today, the way this is going to go is you're not paying yourself a salary. Even if you take money out of the business, it's basically considered an owner distribution, as if you're not an employee of the business. What's going to happen is the business is going to make however much money it makes. What you pay yourself is irrelevant to that. Government doesn't care. The government's going to tax you. Let's say you do 100,000 in revenue, and the business makes 40,000 of that in earnings. Maybe you paid it all to yourself. Maybe you took every dime out of the business as a distribution. The government doesn't care that you took the money or not. The government's going to tax you on that 40,000 as if it was your payroll. So this is called self-employment tax. They hit you twice. You pay the employer side of that payroll tax, and then you pay the employee side of that payroll tax. That's the self-employment tax. And then you pay your income taxes on top of that. So they basically tax you as if you're an employee of the business anyway. You pay taxes as if you're the employer and the employee, and then you pay your income taxes. So if you flip that narrative and you become an S Corp, now you have to pay yourself a wage. Let's say you pay yourself 20, same numbers. Business does 100,000. You have profitability of 40,000, but let's say you paid yourself 20,000 of that as a wage. Now you only pay payroll taxes on that 20,000. You don't pay payroll taxes on the other 20,000. So what's 15.3%? And this is if you're doing 100,000. If you're doing more than 100,000, in revenue, and depending on your profitability, like we're talking thousands and thousands of dollars here, where you're leaving it on the table if you're not an S Corp, and paying yourself as an employee, but therefore only having to pay payroll taxes on a portion of that income. So, like I said, when you become an S Corp, then you're an employee of the business, of that corporate veil. You pay payroll taxes on your wage when you take it, but your distributions, the income of the business doesn't get taxed as payroll. It just gets taxed as income to you. So it saves you thousands of dollars in payroll taxes, basically. And I'll say the tipping point where it starts to make sense is if you're that LLC taxed as a sole proprietor, when the income of your business, not the revenue, but after all the expenses are taken out, including depreciation, including everything, what's left, if that income amount net for the year starts to creep over like 20 to 25,000, that's the time to become an S Corp. That's where, and there's benefit before that, don't get me wrong, but when you become an S Corp, you're going to have 2 tax returns to file. You're for sure going to want a CPA to do the filing for you. So now you're going to have fees to pay 2 tax returns. So there's a little bit of complexity added in. Therefore, if you're making less than 25,000 in net income in your business, it's not necessary. You're not going to gain that much from doing it. But if you're doing over 20 to 25,000 in net income, and remember, it doesn't matter if you're taking money out of the business. Like if the business's net income is over that 20 to 25,000, then today you should be talking to your accountant so that on January 1st, you're an S Corp. Like, yeah, you got a perfect opportunity, clean split, end of year, S Corp.
Love it. Couldn't have said it better myself. I appreciate it. And it's just it's these things. If you don't know, you don't know. So this is kind of why we're doing this. Obviously, getting here to the top of the hour, want to wrap this up in a few minutes just so we can respect your time and you can go out there and hunt and gather and do what you do in the woods, brother. I mean, man of the wild out there hunting. I mean, I honestly feel like the Holiday Inn is roughing it for me because they don't have room service half the time. So I got to respect the hustle outside.
The really important part about it is that it's a date. My wife's coming with me. I'm going to have the bow, but she's going to come with and hang out. It's our, get away from everything date. So we'll see.
Love it. Good luck with that. A couple questions. Janie wants to know that she's working with a couple of businesses in Europe. Would your services be able to help someone in Europe, or do you have any suggestions? And kind of wrapping into that as well, question, if people want to reach out to you, connect with you, and potentially get that targeted budget-free template that you're going to be giving away here shortly, how do people reach out to you at Blue Skies?
Go to yourblueskies.com, and then on our bookkeeping tab there, I'll drop our website in the comments, but if you go to yourblueskies.com, there's a bookkeeping tab. You can kind of fill out and put a little comment that you heard us on the SimpleGrowth podcast, and we're talking about the budgeting thing. If you want that tool, kind of pre-subscribe. I'm building it right now, and I'm trying to get some input on it as to what is useful for people, what's not useful for people. Keep it super simple, obvious, easy to fill out, kind of like you're talking about the PPP one that I made. It's
it was beautiful. It was nice. It was simple. It wasn't too complicated, but it got what you needed to get out of it. So that's what I kind of love about you guys over at Blue Skies. Just knowing you for the last few years, just kind of giving good content and just helping everybody out with those free giveaways and things like that. And obviously, if people need expert help, they're going to reach out to you for the paid services. But very similar to what we're trying to do here at the SA Weekly, just kind of drop some knowledge and help people over those hurdles that we've had to unfortunately get lucky enough to get over and work through. But yeah, check it out in the comments, yourblueskies.com. Check it out. And Dan and Sean are always there, and you get subscribed for that template. In addition here, as you can see on the screen here, we've got the SimpleGrowth podcast. So on all your major platforms right now, we've got that. So this one here is on Spotify. We're on all the major channels. So if you can't join us on the Facebook Live, you're still out on the truck or the cleaning crew, you want to throw some headphones in and spend a half hour to 45 minutes with us a week. They are updated within an hour of the show usually. We're well over 60 episodes right now. So the SA Weekly Talk Show, just search Simple Growth in any of the major iTunes, Spotify, Anchor, you name them, we're there. Just helping grow the community and build this system here in the SA ecosystem. I want to say what's up to Hobie Barrett as well. Longtime watcher, great guy, just crushing it down in Savannah, Georgia as well. Had a great time with Hobie and his wife at the Quality Driven Software Conference last year in Savannah with other certified advisor, Martha Woodward. And I'm telling you, if you don't have it on your calendar and you're comfortable traveling, Martha's got some room left, I believe, for her QDS 2021 conference down in Cancun. Depending on travel restrictions in New York here, I may be visiting that conference, attendee, vendor, and everything else in between. So can't wait, brother. We will see you there. Any closing thoughts? And obviously, if you have any questions for Dan, how to hook up with him and grab his templates, it's yourblueskies.com. Link to it in the show comments as well. So any closing thoughts, brother? Really appreciate you joining us.
So for Jeannie's question about working in Europe, we don't have any clients in Europe. Not to say, business is business and finance is finance. I don't know what the exchange rate is today, but euros to euros is a lot like dollars to dollars. So I might not be able to do work for them, but I can sure as heck be a resource for them. So
yeah, if not anything else, they should grab that template. I know SimpleGrowth, believe it or not, is now pretty international. So we started out in the States, North America, and Canada. Now we've even got service autopilot users in England and, believe it or not, Australia. So if anybody is watching in Australia, we'll figure out a 2-day deep dive if you cover the airfare, because, man, we need to get away from crazy New York State. So until next week, SA Weekly Talk Show, Mike Callahan here. Dan Platta from Blue Skies, and watch out for some big announcements of some new guests coming in on the SA Weekly Talk Show, but possibly going to be having Marcus Sheridan of They Ask You Answer of the Sales Lion. Definitely going to be having Lisa Marino of the Service Autopilot marketing team and Field Edge. Lisa last was on probably 18 months ago and just dropped a knowledge bomb on marketing, Facebook ads, and you name it. She is just a powerhouse. So looking forward to a lot of big things coming down on the SA Weekly Talk Show. Looking forward to our talk next week, Dan, and we'll be posting in, but working on Marcus Sheridan. So that'll always be a good one. He was at SA 5 2 years ago. I just saw him at the top 100 lawn and landscape magazine, like I got behind me here, State of the Industry, top 100, and he dropped some knowledge on what he's talking about. And if you haven't picked up your discounted tickets for SA Thrive, Marcus is actually going to be the head keynote talking about video in your sales process. So always something to be gleaned from Marcus as he's a silent partner now with River Pools and Spas and the Sales Line, where he's going out and teaching other businesses to crush it like he did at River Pools and Spas. So till next week, SA Weekly Talk Show, Mike Callahan, Dan Platta, 12 Central, 1 p.m. Eastern. We'll see you next week.
Thanks, Mike.
Thanks, brother.